So another company that just came out with good news today is a company we've been following that a lot of you own and I'm really happy about. So DGXX is Digi Power X. So it's up about 7% today. It's 330. It's up a little bit higher, about 350, closing in its highs. This is a stock that we've been talking about. I had the CEO, Michel Timmer on twice, but I had him on when his stock was under $1. We have in the portfolio more like $1.50 or 60 or something like that, and it's 330 now. And we're talking about, looking at the chart here, the stock has really taken off, especially when we had him on. I think it was in April, right? So under $1. So I'm looking at this company, and it's not going up just on hype or whatever. It's a company that I followed for a while. It only has a $90 million market cap. This is a Bitcoin miner that has assets, and they own a lot of their power. And the amount of power that they own is incredible. We're talking about 400 megawatts of potential power. Okay, that's how much is going to come online. They already have 200 megawatts online. That is a ton of power. Now, to put in perspective, if you're looking at tier 1 and tier 3 assets, tier 1 are Bitcoin mining. Tier 1 assets per megawatt is worth $1 million. So just with the 400 megawatts, you could say this market cap should be 400 million. Even if you cut in half at 200 million, it's at a $90 million market cap. This company is a Bitcoin miner right now. They're also generating a shitload of money with what they're doing. They're generating $40 million, right? At a $90 million market cap, they're going to generate $40 million in sales and they have no debt. But they're transferring. They decided to do this over a year ago because CEO's smart. He didn't do Bitcoin mining when it was hot. He did it like in 2016, 17, and it's benefited tremendously. Now, when he's switching those assets to tier 3, which are data center. And when you switch to tier 3, it costs a little bit of money, and they did, and they raised money. But those assets now, the tier 1 go from worth $1 million per megawatt to $10 to $15 million per megawatt. Now you say, okay, this is what the company says they're going to do. They came out with a great news release. I think about 6 weeks ago, they signed a deal with Supermicro to help build these power systems. They just came out with news today. So they signed another deal with Supermicro to purchase NVIDIA's B200 powered systems, unbelievable chips, for the launch of its tier 3 module AI platform. You're looking at these assets right now valued at $1 million. Now they're going to be valued, say, at $10 million conservatively. If they just do 200 of the 400 megawatts, we're looking at $2 billion valuation. A company that's $90 million. It's not far-fetched considering the news that just came out today, because now it confirms that Digi Power's initiatives are real. They're not just talking about, they're actually doing it. This is the second big deal that they announced. And the biggest news in this press release is they're also advancing the design of their ARMS 300 platform optimized for NVIDIA's next generation B300 chips. If you don't know about chips, right now everyone's buying the B200s. You're looking at Jensen selling like whatever. I think it's 4 generations lower than to China. Oh, yeah. The B300s are like the state-of-the-art chips that are for liquid cooling. And they say the company's 2026-2027 roadmap includes the development of 55 megawatts of tier 3 AI infrastructure. Okay, we're looking at what? That's 6 to 12 months to 18 months out. Right. So this company is positioned where converting 55 megawatts to tier 3, that's 10 million per asset. We're looking at $550 million market cap, more than 5x from where the company is right now. So these guys are doing fantastic. You throw in the fact that they have a lot of Bitcoin on their balance sheet. If they decide to launch a Bitcoin treasury strategy, which we're seeing and getting a popular name on it, they have that option as well, because what you're seeing with these strategies is they're taking really shitty companies that they're doing reverse mergers on, and these are holding companies. This is an existing company in this industry. It's perfectly placed where they could do this. They have a good balance sheet. It's easy to raise money. If they got a big name, we're seeing names that are announcing these Bitcoin and Ethereum treasuries, Solana treasuries, the Tau treasuries with big names like Tom Lee, Justin Sun. You have James Altucher, right? It's amazing because a lot of these stocks are popping 500 to 1,000% plus within a couple of weeks. I'm not saying they're going to do that, but they have a better option, and it'll be much better for this company that's already in this industry to do something like that. We're not even talking about that. They could still keep their business model, transferring tier 1 to tier 3 and do this, and their stock will go up tremendously, right? So it's a company with a great management team, few people know about. They've been talking about doing this for a while. I know you look at RIOT and MARA said they're going to do this. They're not really doing this, going to tier 3. I put up a performance, by the way, of over the past 4 years, Daniel, between RIOT, MARA, and Bitcoin. Bitcoin was 30,000 4 years ago. It's 120,000. It's up 300%. And if you look at the other two, MARA and RIOT, they're down an average of about 20, 25% each. How is that possible? How the F is that possible? When your underlying commodity, basically 3X's, It's oil going from 65 to 180. You're an oil company and your stock is down 25%. There's something wrong. It's called dilution. What I like about this company is they're not diluting their shareholders. They have zero debt on their balance sheet. It's run perfectly, which didn't benefit them because the MARAs and stuff like that, people were pouring into that. And the riots, they're not pouring into those anymore. This is a company that's still unheard of, under the radar. I think it has a lot more potential, and it's still dirt cheap here based on the power that they own. Remember, hyperscalers, guys, what are they doing? They're buying SMR power that's not going to be available. 3 Mile Island, restarting that plant. This stuff's not going to be available for 3, 5, 7 years. Oklo's trading at an $8 billion valuation with no revenue expected for the next 3 years. That's how in dire need they are on power. These guys are sitting there with all this power. It's one of the biggest assets you could own in the world right now is power. Everybody needs it. They have it. They have a shitload of it. I love where this company is. You're going to see, I think this thing's really going to go a lot higher as more people understand this story. And I just love the management team. And I met him at his house. Just a really good down-to-earth guy. Him and his son really run this company, and I'm glad a lot of people own it and doing well. It's really good to see, especially with the news today. It's really starting to pop.
Absolutely. Well, when you first recommended it, it sold off. You added to it, so the cost basis for subscribers is $1.65. So give or take 100% up right now. And quickly for me, Frank, I thought the biggest thing here from the press release, and something investors can look at in all other stocks that you own, is when management gives you a roadmap or checkpoints, you can hold them accountable. And I think that's a big deal. And in this press release that is sending the stock higher today, they talk about this recent build out with Supermicro is going to be in Q4 of this year. And, we're in Q3, so that's very soon. And I just tip my hat to managements that give you these roadmaps, and that's something that investors can look out for. So pay attention close to that, because that's impressive to me.
And look, people might say, what are the risks? The risk here is, hyperscalers cut back on data center spending. And we saw a little bit about that 6 months ago. We're not seeing it anymore. We're seeing an increase. And if you want proof of that, Taiwan Semi just reported, you should see those numbers. I mean, they're up 40 sales. Sales are up 44% year over year. They just raised guidance by another 10%. So Taiwan Semi, they're the benchmark for hyperscale spending. You're going to see it hit that company first before anything else. That's the benchmark. If you're seeing spending slow, it's going to be seen there. That's where almost all the orders come from. And they're not seeing any signs of a slowdown, which is great for hyperscalers. It's great for AI suppliers. A lot of those companies that we're in, it's great for AI infrastructure companies. Again, things that we've been talking about in terms of, power companies, especially in our AI newsletter. And it's really great news for Digi Power, because you're not seeing this slowdown in spending. You will. Even the guys that I talk to who build this infrastructure for hyperscalers, a lot of these guys are saying, hey, I mean, when you're spending $100 billion, $80 billion like that, like these guys are doing $80 billion a year, you have to get a return on your investment. So even these guys are like, look, in 2 years, you're probably going to see it slow a little bit, but we're not seeing it right now. And even if it slows a little bit, I think it's just going to slow a little bit, because these guys have to compete with each other. It matters who has the best system. It really does. And that's why these guys who have the deepest pockets, that's where you want to be. And this small company, under $100 million market cap, it's really cool to see it. I'm glad we got in really early, and I think there's much more upside ahead as long as management executes. They have to execute, and this trend is pretty much well intact. I just got another report. They're increasing spending. So the hyperscalers are increasing spending right now. They need power. This company has it. And remember, that Bitcoin strat, I don't know if they'll do it or not. I didn't talk to management about it. But to do it for this company is not changing your business model, since they already own Bitcoin on the balance sheet since they're a Bitcoin miner. And to do that and raise money is going to be very easy for this company, because they could use the Bitcoin that they buy as assets and even borrow off of that as well, which you weren't really allowed to do before the accounting changes. You couldn't really account that as collateral. Now you can. And that's why you've seen a lot of these Bitcoin companies go a lot higher, move a lot higher, because, also the spending bill with Trump, right? Which is a big deal. I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. I'll tell you specifically what moves you can make today, specific investment ideas I'm recommending and tracking each week, also the news we're picking up from our network of insiders. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.